Good morning, traders. This is Brian Booth, Senior Market Strategist here with MF Global in Chicago with your morning update for the softs markets. To begin with, the December cocoa, we had a price of 26.01 was the last down on the day here today. I'm just looking at things from a technical standpoint, and also the fundamentals I think are somewhat important at this point, but we want to keep an eye on what happens here with any votes out of Europe that may affect the direction of the euro versus the U.S. dollar. As we all know, that if the U.S. dollar is making its way lower, that will be supported for higher prices across the board for majority of the commodities here. Now, cocoa, it seems like it has backed off quite a bit here. It looks like the dollar is trying to gain a little bit of a foothold as we wait for votes out of, I believe it's Slovakia or Slovenia, one of the two, looking for them to pass a vote that would definitely be an important addition here to what's happening so far in Europe, and any one of the markets that we traded, especially the softs markets, would be affected by the direction of the dollar. So I think as long as, from a technical standpoint, as long as we stay below that 26.85, that September low from 2010, then I think that the cocoa will continue to be a sell. That market has had overall bearish fundamentals, since 6 months ago, ever since things lightened up here in the Ivory Coast. So continue to look for opportunities to sell into that market as long as there's no big wild swings here in the major markets around it. December coffee 225.10 was the last. That market's also been weak. I think any closes above the August lows of 237 and 238 would confirm a move up here. I think that if we continue to sell off, that we should target the 210 area. Below this price, our current price of 225.10. March sugar 25.64. Looks like we had a little bit of strength in the market yesterday, but it is backing off so far here today. We do have a production surplus that's expected globally here, so that should continue to pressure the market. But from a technical standpoint, I think I would like to see us stay below the 50-day moving average, which comes in right around 27. If you're able to get the 50-day moving average in on your daily chart, so far it's been a pretty decent indicator of a resistance level. Lastly, December cotton 102.91. That's also holding below the 50-day moving average as well. Now, we will get some news from the USDA tomorrow. They have a USDA report. And as we all know, the cotton market will share acreage in the U.S. here with some of the other crops. So we're definitely going to want to see what kind of news we get here from United States Department of Agriculture that will let us know if we're going to continue to fail below this 50-day, or if we start closing above. Then we should see the market rally from here. But most importantly, we just want to keep a real tight eye on any news from Europe that will continue to give traders that risk-on mentality. And you're going to want to try to pick markets that look like they have broken through technical levels if we do see the U.S. dollar back off and continue to see the euro rally here. But you want those technical indicators to come in first, and then you can jump in and take a long position. Overall, it looks like short's the place to be. So if you have any questions about the markets that I just presented, or any of the markets that we trade here at MF Global, feel free to contact my office at 800-993-6601 or by email at bbooth@mfglobal.com. Always remember that futures trading involves substantial risk of loss and is not suitable for all investors.